Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning. Sorry I'm really late, but for some reason, my alarm application on my phone has decided to start going AWOL again. It's like it doesn't matter which application I use, eventually something happens and I end up waking up 15 minutes late. So, but being only 5 minutes late to the stream, not too bad. I was able to work it out. Let's look at what the markets are doing over here. Man, the treasury's seeing quite a bit of downside action here now. So yesterday they did come down and like complete this pattern, but for most of our session it kind of didn't go anywhere, if not like rebounded. Now here in the overnight session, quite a significant turn to the downside, and we are at what, 3.638 already. So over here in the S&P 500, pretty good bullish action yesterday. Still got a little bit of, I mean, they've overcome like most of the initial downside when things got really bad. But there's still, there's still a little bit to recover here. So oil also rebounding. Gold and silver taking fairly decent hits yesterday. In fact, copper on the bullish side, and then we come over here, Bitcoin holding the increases that they've had over the past week, and the dollar still a little bit lower, 102.5 now. So it might not look like much on the chart, but that's pretty good consistent downtrend. I've been waiting for over an hour. Nope. My phone does adjust to daylight savings time. I do wonder if the phone app is having a problem with daylight savings time or something. I don't know. Like, the thing is, the alarm just straight up doesn't go off. It just straight up doesn't go off. I don't know, whatever. Like, I had this thing where my one application on my phone, my Sleep Number bed application, was modifying the alarm time to try and make me wake up at the end of my cycle better or something like that. But this one is it straight up never goes off.
In the Financial Times, Credit Suisse fallout threatens to hold to issuance of risky bank debt. So Financial Times saying that some of Asia's largest lenders may pause the sale of additional Tier 1 bonds after $17 billion.
Financial Juice says happy FOMC day to all who celebrate.
$17 billion of Credit Suisse bonds has started to question further issuance.
Is that what it is? Is the holy day of FOMC?
Banks considering pausing sales of
Fed whispers views what to watch as the Fed meets amid turmoil from the Wall Street Journal. Oh, I can't really read that one, unfortunately. When Nassim Nicholas Taleb this morning actually it was a while ago, it was 13 hours ago, when I argued that everything in Bitcoin was traceable and triangularizable, I was told that a Monero could be anonymized. Turns out the founder / lead maintainer was a mole for Interpol? Are you kidding me? Now, there's a possibility that the fellow was not a mole. It still tells us systems can be infiltrated and will be infiltrated. That is nuts. Are you for real? I do like financial juice. I'd have to say that none of my news sources have really been there very well for me through this crisis. I feel like I'm finding out about things late. But generally, overall, they've been really good. And I don't think that that's a problem. I think that that's probably a problem you're going to have regardless of which news squawk you're on. Because what's happening is there's secret banking stuff going on, right? And only the people in the banking world know, and they don't want everybody to know. So they intentionally don't send that stuff out to the news squawks and the news services and stuff like that. And so that's why we're constantly feeling like we're behind, right? But I remember it being kind of like that during the 2008 crisis too. Constantly, the market constantly being blindsided by what was going on. So, but especially since it was like, for me, $1,000 for a lifetime and everything, probably one of the best deals I've ever done. That service has provided so much value to me. And of course, you know, I have a affiliate link in the video description, but part of that is because I really feel like it's the most valuable thing that traders could get to help their trading. I don't know. This morning on Twitter, it seems like people are still more interested in whether or not Donald Trump will get indicted. But it sounded to me like what happened yesterday was the testimony that they wanted to use to indict him did not end up being able to indict him. And so now they're trying something else and it got pushed back. That was the rumor mill, at least. A little stuff about politicians, yada yada yada. I might be a relatively quiet session this morning. Big bid there at 30. Just added. About 1,000 contracts added on there. That is probably automated. Bank of England pauses dead as UK inflation unexpectedly resurges in February. That could be why we started to see the downtrend here this morning. What's your open scenario? So for the Federal Reserve meeting, I'm a little bit concerned. I'm a little bit concerned that the market sells off either way. So hear me out. The market is pricing in 25 basis point hike. I suppose that they read 25 basis point hike and that's what was expected, that the market shouldn't do anything, you would think. But in an event like this, it's going to move, okay? Promise you that. Even if it's in line with expectations, even if it shouldn't be moving, it's going to move, okay? That's the first thing. But then the second thing is that a 25 basis point hike is not good for markets, right? That is going to slow markets down. And especially in a scenario when there's already some concerns around the markets, you know, that's kind of an important thing to note, right? So they raise, it's probably slightly negative for the S&P 500, right? But if they keep rates unchanged, or even if they go with what Nomura is calling for, which I don't know if Nomura's call is relevant anymore, but Nomura was calling for a 25 basis point decrease. If they did a decrease, I say S&P 500 still sells. Why would I say that? Well, if they decrease 25 basis points, that means that the Federal Reserve has reason to be very concerned about what's going on. That would suggest to me that the market is a lot worse than we realize. That the Federal Reserve believes that the market is a lot worse than we realize, right? So you could get this situation where they sell off either way, right? But
The ECB's
I'm not. That's not something that I would be like placing a bet on, right? Because it probably sounds like, oh, okay, so I should just go short E-minis right now at 40.34. I don't think I would do that because number one, you don't know what's going to do before before the meeting, and number two is that there's going to be so much volatility during that event that if it does end up being to the downside in the end, there's probably going to be like huge waves of buying in between. Like it's just going to be a huge mess. So for me, this is not an event that I'm interested in trading. I think it'd be very hard to find an edge in all of this. I think that you can gamble on it and you're probably going to be able to make some big money because of how big the swings are going to be. But in terms of like generating an actual informational edge to know which way it's going, could be really, really hard. But, then you're going to have the press conference. And what Powell says at the press conference could just be like, oh man, who knows, I guess. I want to make these bars smaller. How do I... That's a little better. Don't you get... Nope. Don't really care about levels. There is no evidence to suggest that those sorts of things really matter. I mean, I'll put in benchmarks, right? Like if I come in, like what are the levels? I can tell you the levels that people are going to watch, right? Here over in ZN, we're kind of in a messy area. So on the downside, before you're really like breaking out of something, you got to get below this pivot at 113.08 half, right? And then on the upside, you've got the overnight high. High Anastefa. 113.27 was a previous point of control from many days back. But it just goes back to the thing that we've been arguing about all week. Yes, was show me evidence that any of these matter. Show me empirical evidence that any of these matter. I do not waste my time with things, analyzing things, unless I have evidence to suggest that they're effective. Because there's too many effective things out there for me to worry about. Live order flow. Well, the autocorrelation of market orders is a strong indication of future flows, yes. The strong short, over an hour time period is a pretty good indication. It is interesting to me, this activity we're having at 30, just because somebody added there. With the way that added, that looks like a robot to me. And you kind of get this thing where like sometimes there's like a kind of a pivot point where like the market goes, oh, it's long or it's short, and they start stacking liquidity there. But I've often found that when that happens, that it kind of churns around it. So that stack there at 30 doesn't necessarily make me super interested. Oh, that's interesting. They actually traded down through it. could give insights on whose hand. You know, Sonny, in this kind of situation, there's going to be so much volume that comes in that, like, people's pre-existing positioning and stuff is not as useful, right? Because the amount of market volume that you're going to get on this event is just going to be so insane, right? The flows, like, we do know something that can help us kind of predict flows. Might not tell us which direction they're going to be, but we know that because there's an FOMC day today, and because of all of the market drama and the amount of uncertainty around this, and this possibly being like one of the most significant FOMC meetings in history, there's going to be a lot of volume, right? There's going to be a lot of market volume. So, like, people's pre-existing positions and stuff, I don't know if they really matter. I really don't. But I think you might be right, Anastafa. The treasury market is kind of suggesting that they're just going to chill here until the meeting. Like, they had a pretty big move down overnight. I think probably because of that hot inflationary data from the UK. So I think if I had to pick a direction this morning for a trade this morning, I would be looking for interest rates to probably increase further. You know, wouldn't be out of question for us to get to 3.7, but that would be a relatively good move. We're expecting things to be a little bit more constrained. Probably a little bit more constrained, but if they do move, probably rates go higher. That's my prediction of the flows this morning. So I want to read this story from Zero Hedge. Devoted to FUD, industry outraged as White House slams crypto. Offered by Felix I don't know how you say that. I'm not Vietnamese. Via Coin Telegraph. The report included 35 pages seemingly aimed at debunking the merits of crypto assets. Crypto executives have expressed irritation over the latest White House economic report, which notably features an entire chapter dedicated to casting doubts on the merit of digital assets. The economic report of the president, released on March 20th, marks the first time the White House has included a section on digital assets since it first began issuing the annual economic policy report in 1950. The co-founder of the digital asset investment firm Paradigm, Fred Esram, remarked that 15% of the economic report was dedicated to crypto, quote, crypto FUD. The report includes 35 pages dedicated to debunking the perceived appeal of crypto assets, along with a short section on the FedNow payment system and central bank digital currencies. The report's main argument is that crypto assets fail to deliver on their touted benefits, such as improving payment systems, financial inclusion, and creating mechanisms to transfer value and intellectual property. That's all true, and what I've been trying to say to people now for 5 years. Instead, their innovation has been mostly about creating artificial scarcity in order to support crypto assets' prices, and many of them have no fundamental value. Ding, 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 ding. It also argues that cryptocurrencies fail to perform the functions of sovereign money, such as the US dollar, as crypto prices fluctuate too wildly to be stable store of value, nor can they function as a unit of account or medium of exchange. These are all true. They're mad that the White House correctly understands cryptocurrencies. That's unfortunate. So far, there's quoting from the report. So far, crypto assets have brought none of these benefits. Meanwhile, the costs generated by several of their aspects, such as those for consumers, the physical environment, and the financial system, are not only substantial, but are also being accrued in the present. The report also takes aim at stable coins, arguing they are subject to run risks and thus too risky to satisfy their role as a fast payment instrument. Blockchain Association CEO Kristen Smith called the latest presidential report disappointing, saying that it shows that some in the government appear increasingly allergic to the burgeoning crypto industry. We urge the Biden administration to consider how it will be remembered as a leader of a profound innovation or a roadblock to a global tech revolution. It's not going to happen, guys. Like, here's the thing that drives me crazy the most about Bitcoin, right? It's not just that all of the purported benefits of cryptocurrency have not come to pass, but that they literally cannot come to pass. Using Bitcoin as a medium of exchange, you can't do it. They tried to do it, and all of the vendors abandoned it because it didn't work. And there have been some other coins that, like Bitcoin Cash, that have kind of gone back towards that direction. But I think you still kind of run into these problems that, like, the price is too volatile and all of these other things that when the market goes down, everybody that's using it gets screwed, right? So they don't want to. I don't know if you're ever going to get like we've already past peak Bitcoin adoption by vendors, and they can't overcome the technical problems with Bitcoin. So it's not like there's never going to be a global, quote, tech revolution. It's not going to happen. The technology is literally not capable of doing it. And the more that it would get more adoption that happens out there, the more the obvious flaws would stick out to people, right? So it's actually like the more that it starts to get used, like the closer you are to Bitcoin's ultimate demise. Do you know that the Bitcoin blockchain is backed by Okay, who cares? Doesn't give it fundamental value. It doesn't make it capable of transacting enough transactions to handle, the global economy. It doesn't handle the volatility that is inherent in an instrument that is traded in the way that it is.
World Bank President
There's just without a fundamental value to Bitcoin, something real actually backing it is just never going to be usable for what people want it to. It will only ever be a method, a vehicle for speculation. That's all it is. It's not a store of value. It's a speculation vehicle. Decentralization also highlighted in the report, which argues that despite claims of being decentralized and trustless, blockchain-based applications are in practice neither. Users access crypto assets by going to a limited set of crypto asset platforms, while a small group of miners perform the majority of the mining in most crypto assets. The latest annual economic policy report was published some 2 weeks after the collapse of Silvergate, Silicon Valley, and Signature Banks, all three of which had served aspects in the crypto industry. Dan Reeser, Chief Growth Officer at decentralized finance platform Acala Network, claims that the report comes just days after Operation Chokepoint 2.0 was executed on crypto-friendly banks. Some pretty shocking experts below on crypto and US CBDC from this 5 weeks through 513-page economic report of the president released from the US. Things are looking bleak for US competitiveness, economic freedom, and privacy if this continues. He also noted an obvious early warning of an upcoming United States CBDC or digital dollar, referencing a section of the report that seemingly touts the benefits of a US central bank controlled currency. Now, the CBDC issue is interesting. Did you see that yesterday Ted Cruz had introduced a bill in Congress to just prevent the government from ever doing a CBDC? Because right now, the government has been investigating it. I wouldn't necessarily say that the government has been pushing towards making it happen necessarily, so much as just exploring this as something that we have to look into, because what if it does end up being an important thing? We need to be like on top of it, sort of a thing. But the whole issue is that while there are possibly some benefits to a CBDC, that all hinges on the CBDC being implemented correctly And I have zero confidence that Congress would do that. Somebody just posted something in Discord that was, I'm like, oh, we can respond to that. It matters. It all matters. It doesn't matter. I will second that the market is not the economy.
As we get this confirmation now from other sources, as PacWest says it has secured $1.4 billion from its Atlas financing facility.
Is it going to be a slow day? It could be, man. The treasuries are on their lows, so I was saying, well, if I had to pick, what I didn't say if I had to pick a direction, but I said my prediction is that we will have constrained action, but that it will probably be tilted to the downside. Looks like we are moving to the downside, but it's still super slow, and I'm gonna bet that if I went for a as she goes kind of break of the bottom here, that probably what would happen is I might get like 1 or 2 ticks favorable, and then it would come right back to break even and mess with me for an hour, kind of like what it did yesterday. Like I doubt this is a market that like trends for like, you know, a whole point without ever coming back at all or anything like that, right? It's probably going to be more like a slow moving freight train. But let's just see. You know, the one thing that I will say is that the markets are constrained enough that we could trade it. There is that. I think that I would really want to get good prices, but
The effective Fed fund rate unchanged.
the money markets are a major integral part of the whole world economy, which is actually IR, in fact, the reaction to economic projections, news, and indicators. Yeah, so when people, I've seen this a lot from the price action. So this whole thing, we've gotten into this, I don't know why, I think some people, because I was reading the comments yesterday after the stream, because we were arguing about this, and I was like, well, you guys are trying to argue something a little bit slightly different, because my whole point was this one particular person was full of shit. This one particular person thinks that they have something and they don't. And they just haven't been trading long enough to see it. To see how degenerate what they're doing actually is.
Growth at 1.6%.
But
3% in 2020.
one of the things that these really big price action advocates come up with is that they say, well, I've seen situations where a company beat earnings and they went down, and where they missed earnings and they've gone up, and all of these other situations. So you can't actually predict how the market will move based off of the news, is their assertion. Well, the reason why they feel that way is because they don't have a sophisticated enough way to analyze what's going on. And the reason that they have that problem is because they don't understand this key insight that we have, which is that it is the orders that move the markets. So it's not a kind of more traditional approach to finance would say that when a company's earnings come out, that changes what the company is fundamentally worth, and then market participants calculate what the asset is fundamentally worth and start trading towards that direction until it gets there. And they arbitrage that slight discrepancy between what the price was when the news was released and then what it should be now that we have that information. That's like the traditional approach, right? Our approach, and the approach that I believe the empirical evidence strongly backs, is that it's the orders that matter. And so when a piece of news comes out, regardless of what kind of news it is, or a new piece of information is revealed to the market, people look at that piece of information and then decide to buy or sell based off of that piece of information. And it is the number of orders that come out of that actually move the markets. And so you could have a situation, for instance, where because of how people are positioned and the piece of news causes them to shift their positions, that it causes a move that is contrary to what the fundamentals would be, right? So it's better, instead of thinking of it as the market's reaction to fundamentals, we should think of it more as the order's reaction to that new piece of information, right? Now that we have that kind of a framework, we can kind of sort out, okay, so what were the things that were driving the flow? There was people that already had a position on. There was people that decided to open a new position based on that piece of information. There might have been other flows going on that had absolutely nothing to do with that piece of information, like maybe end of month rebalancing that ends up being more important. Other flows, right? When you analyze all of those flows and combine it together, you should always be able to come to a conclusion after the fact, at least, as to why the market moved the way that it did. Sometimes, even after all that analysis, we do kind of have these sorts of things where it's like, well, there's this flow out there. It's really strong. We don't really know where it comes from. But usually after a day or two, we it is revealed to us and we understand why. Right? But that all hinges on orders move markets. Orders move markets. I don't follow crypto myself, but Bill 1193 in South Dakota would amend Uniform Commercial Code to exclude crypto as money and include CBDC as money. The governor vetoed it for that reason. That's weird. Yeah, I guess. So, I mean, there's something about my politics that I think is important to realize that is not really necessarily going to be clear unless you've been watching me for a while, just because this is not necessarily a popular position to take necessarily, okay? But I'm a Republican. The Republican's not the unpopular part. Okay. I am a Republican, but I despise the libertarian wing of the Republican Party. They are so effing stupid. And it comes back to all of this stuff that I'm teaching you guys here on the stream, things that we have empirical evidence to back certain information about the market. And then that information, I think, leads to a certain number of obvious conclusions about economics in general and public policy, right? And one of the fundamental conclusions that you have to come to is that because the market is not informationally efficient, you cannot, the market is prone to endogenous shocks, which means that the financial system will always run into some sort of a crisis that requires the whole system to be saved. It will always happen. The libertarians don't believe that, right? Because the libertarian position is based more on some philosophical faith in the free market in general. They believe that if you just unsheath the market, unleash the market, and just make the market as free as possible, that it will always function correctly because the market is efficient, right? See, the whole libertarian position, in my view, is based on the idea that the market is perfectly efficient, which we know is false, right? So there's all these guys in the libertarian arena that like cryptocurrency because they believe that one of the biggest roadblocks to having a completely free market is the government's control of the currency. So they would like a currency that's not controlled by the government. Which is just a dumb idea. But then that comes back to like, okay, so if that's what you believe, Seth, then what about a central bank digital currency? Well, number one, are the benefits to a central bank digital currency really that great? And then number two, can you do it correctly? Because like that's the whole thing, is that I'm like, well, if they did have central bank digital currency and they did it correctly, that would probably be pretty cool. That would be pretty cool. But I don't think that the pretty cool parts, the benefits outweigh the risks of how a country and bad actors could use such a tool to oppress. And I have zero confidence, absolutely zero confidence that the representatives that we have in Congress would be able to craft laws that would actually ensure that the government does a central bank digital currency in a way that would not be able to be abused, right? It would still need to have all of the same characteristics of cash, which is that it should be anonymous. Like everybody can see the transactions, but they won't be able to know who I am or who did that transaction or anything like that, right? You need to have a situation where people can use it as a ledger to verify transactions, and they can use it as a ledger to transact things, and you can use it as a record to calculate everything that's going on in the economy, but at the same time not be able to identify individuals through transactions and so forth, right? I don't even know if that's technically possible. Like, the whole thing is that the Monero was supposedly the closest one to that, and now we find out that one of the lead developers was working for Interpol. Okay. That's so crazy, man. So we're going to understand the basic concepts of order flow, such as absorption, delta imbalances, front pushing, spread widening, high volume, blah, blah, blah. And it's important to know what market we are in a trend. Yeah, as long as, so if you go back and you look at my order flow series, go and look at how I do it. Because I saw a comment the other day. It was actually one that got held for review for whatever reason. I hadn't looked at those in a long time, but they're watching the first video and it was like, see, he didn't actually teach you how to use the DOM or how to use order flow. Well, because all I'm doing in that video is just, you have to even understand what you're looking at, right? like the first 3 videos are just trying to help you understand what you're even looking at. And yeah, you're going to see areas of absorption. You're going to see all of these sorts of things. Like, you need to understand those things to understand what you're looking at, right? But the flaw that I think the majority of people come into is that they think that then if I combine all of that information, I can get a high probability predictor as to what's going to happen next, right? The kinds of signals and predictors that you get on that sort of a thing are like hyper short term. Hyper short term. And that's why then the next 2 videos after that, I go into some empirically proven behaviors of markets, because that's the information that we have that we know is actually predictive, right? It's a kind of a funny thing is that the one thing that we have that's the most predictive is also the simplest. Just look at your cumulative delta and look for a trend in your cumulative delta. Even though we've kind of bounced up here, it's pretty clear from the volume overall that the trend is to the downside today, right?
ECB's Ren adding that terminal rate is a volatile concept and says the ECB are to focus first on price stability, then financial stability.
Saw a commentary on your video of months ago saying that you used to love polarity. I am not sure what you're talking about. I am not sure what you're talking about, DK. Polarity AI, I don't think I've ever seen that word in my life. I think intuition helps you a lot. Yeah. So let's talk about that for a second, because I think it's useful to understand what intuition actually is, because if it's just like you've got a feeling, don't listen. That's bullshit. Okay. but what happens is our frontal lobe is a complex machine learning neural network, essentially. And so what you're doing by watching the market is you're training your neural network. That's what it is. So have you ever heard these stories about there was this girl that her parents were very abusive, and so up until they were like 5 years old or something like that, they were literally locked in a closet, and that girl never learned to speak. It was like they had missed a critical learning time in their life, and thus they were never able to speak. Okay, so why does that happen? Because a part of your development is training that neural network in your frontal lobe to learn language, to do social interactions, etc., etc. Right? The reason, why do we have the frontal lobe? Well, for two reasons. Number one, because we were hunters and hunter-gatherers, and so you need to be able to predict like where the food is going to be. And number two is because we're social animals. And so that neural network is really good at interpreting what's going on in a certain social situation and reacting to it quickly, right? That's what a neural network is good at, is taking a big jumble of information that is not necessarily like lots of data points. It's not like coming in and saying, okay, here's like 1 million data points, and then based on that, what's my extrapolation? But rather it's like, here's a data point from this piece of information, and here's a data point, and it's actually taking like hundreds of different data series rather than like one data series with a ton of items in it, right? And combining that together and making a very quick decision based on that. So what I think often happens to people is if you're coming in here, you're sitting, you're watching Twitter, you're reading the news and everything, your neural network is going to train on that, and it's going to make decisions and incorporate information into its model without you even being consciously aware of it. So I do believe that there are a large number of people out there that claim to be technical analysis traders and are incorporating breaking news and so forth a lot more than they realize. I think that was one of the cases with my mentor, because I was always finding situations where he was breaking what his claimed technical rules were. And he always had some excuse for it, but it was always in line with the way that the market was going, you know? So that's the whole thing when I come into this, when we come into this approach of like, okay, what is effective at finding out what is effective? Well, my argument is that it's empirical evidence, right? Like if you go and you get 100 traders, right? And like our stats are like 20 of them actually make money, right? I'm going to bet you that of those 20, that probably half of them or more are lucky or taking excessive risk, which is to say that like if you did that another year, 10 of those guys would not make it into the profitable. It would be a different 10 guys because what they were doing was either lucky or excessive risk. Right. You want to be one of those 10 people that are there every year. How are they doing that? They have an actual edge, right? When you come in and you say, okay, I'm going to do technical analysis, and there's no actual, no way for you to prove that it actually works, like empirically. You can just, well, this guy, he had success with it. It seems to appeal to me for some reason. I don't know why things appeal to people. That's just like a complete mystery to us, right? You go and you start doing it, okay? So now you're trading on this system, right, for years. And then after 2 years, you realize like it doesn't work. You've wasted all that time. But it's actually worse than that, because that whole time, what have you been doing? You've been training your neural network. You've been training your neural network to look for technical analysis instead of training your neural network to understand order flow and predict order flows based on based on new pieces of information, and then being able to extrapolate based on all of the different flows that you know about which direction the market is likely to go, right? So you're mistraining your neural network, right? Institutions, you know, like the big banks and stuff like that, my understanding is that they don't really like to take people that are like, you're a kid and during high school you were just like a huge technical analysis geek and you spent all your time looking. They don't like those guys, actually. They want somebody that's fresh, that they can train from the very beginning, so that they're not putting that incorrect stuff into their neural network. You see what I mean? So that's why it's so important to verify with empirical evidence that the thing that you're actually focusing on in your trading is actually a thing. Okay, so a couple of different things in here. Wouldn't rate hikes have the opposite effect on inflation because banks would be more likely to lend at higher rates? So wouldn't stocks go higher based on increased? No, that's not how it works, Bob Dones. So what is actually increasing interest rates? Okay, increasing interest rates is changing the federal funds rate. Okay, the federal funds rate is the rate in which banks use to lend to each other, right? So what that means is that if the interest rate goes up, the amount of money that a bank can go and borrow from another bank in order to do a transaction decreases. That's what that means. That means that the amount of money that I can go and loan out to other people decreases, right? Because the interest rate is higher. Interest rate is higher, more money is spent on servicing the debt, less money is available for me to actually turn around and give to people, right? And so raising interest rates has the general effect of causing markets to go down, because that's less money for people to buy stocks, that's less orders buying, and that's why the market decreases. That's how we can take an order flow approach to why does raising interest rates have the tendency to make the market move down. It's because raising interest rates means less money, means less buy orders. So your buy order flows are weaker because of raising interest rates, right? Peter Davies' video from Jigsaw helped me a lot to understand order flow and liquidity volume. I think that they have some good education in terms of like what are you actually looking at, right? I think that that's one of the first roadblocks. I don't feel, and look, I'm a smart guy. I think that when you say that sort of the thing, it's kind of like a narcissistic thing to say, and people are like, anybody that thinks they're that smart must not be that very smart. I'm a pretty smart person. Okay, I'm very ADHD, and that's like a huge downside. That's a huge thing that I have to deal with. But overall, I'm quite intelligent, and I'm sure that because of my ADHD, if I took like an IQ test, not the IQ tests are really actually very effective, but you know, I would probably be in like the 105, 110 range. People have always told me I'm smart, okay? But it took me a year before I think I really understood what I was looking at. Just because it takes time for your brain to make those connections. It's building a new network in your head, man. It's literally nerve cells connecting to each other and making connections. That takes time. The rate on the 4 and the 8 week is lower than the federal funds rate. Yeah, the yield curve is pretty crazily inverted right now. People are not born with ADHD. Yes, they are. You know that it's genetic, right? If a parent has ADHD, it's like a 54% chance that their children will have it. It's genetic, and they've identified 20 to 40 different genes that they believe could be responsible for the expression of ADHD. So it's more complicated than just do you have the ADHD gene, but certain combinations of these seem to lead to ADHD. But that's probably why you get like what we call autism spectrum, right? Which is that all of these things kind of interact together in complex ways. And when they don't work the way that they're supposed to, there's hundreds of different ways in which it ends up being expressed. But so I would say that because it's genetic that you are born with ADHD, right? But this is just the other part about training the neural network sort of a thing, is that if you are, as a child, the ADHD is identified early, because the thing that's interesting about ADHD is that it's not that your brain doesn't develop, it's that it's developmentally delayed, which means that your executive functioning is about 2 years behind your peers if you have ADHD, right? So if you take the medication generally fixes the problem, which is that the nerves, there's not enough neurochemicals in the cleft between the nerve cells for the signal to make it to where it needs to go fast enough. Basically, the signal doesn't get through, and then the signal has to get sent again more strongly to get through, right? So if you take the medication as a child up until your 20s, then you get to a point where you don't need the medication anymore, because then the brain has caught up developmentally. And if you're taking the medication ensures that the development of your neural network continues to progress and finishes correctly. Could have been, how would a vaccine cause that? I don't think there's any evidence. Let me tell you, here's what happens with this, is that the point at which that frontal lobe starts to develop is around there's kind of some different benchmarks, but one is like after a child is pretty solid about walking, so like a year and a half, so somewhere between a year and a half and 3 years old is when that frontal network starts developing, and then you get kids start speaking, right? And that is around the time that you start getting vaccinations and so forth, right? So a lot of people have falsely associated autism and ADHD with vaccines because it seems like, oh, well, we didn't start noticing problems until they got the vaccine. But it wasn't that the vaccine caused it. It's just a coincidence that it's at around that age that the symptoms start to develop. That's nonsense. Why would going into ketosis do anything for your ADHD symptoms? It's a deficiency of dopamine and norepinephrine in your brain. Why would ketosis create more dopamine and norepinephrine in my brain? Especially if from based on the medications that I respond to, it's probably likely that part of my problem is that my nerve cells have too many of these little vacuums that suck the because if you have too much dopamine in the nerve cell, then it will just propagate the signals over all the time. So if you have too much dopamine and norepinephrine in your brain, then what you get are things like schizophrenia and seizures, right? So your cells have these little vacuums that suck out the dopamine and norepinephrine out of the cell to keep it in balance. And some people are born with too many of those, and so you end up with a deficiency of dopamine and norepinephrine in that cleft. Right. So now that we know how ADHD and autism spectrum disorders happen, now you can go about trying to figure out cures for it. Well, why would ketosis do anything, right? Whereas on the other hand, we know that amphetamine drugs produce dopamine and norepinephrine in the brain and cause your brain to secrete it so that you have enough. Yeah, it doesn't increase in brain ketones, enhance dopamine and norepinephrine. I've never seen any evidence to suggest that. So the reason why I'm kind of confident in coming out and being like, well, that's not going to be the case, is that they've done so many studies on like different types of therapy and diets for ADHD. And they've never really been able to show any kind of efficacy. There have been a few studies that kind of suggest that certain diets could help, but only in as much as there could be certain chemicals in your food disrupting neurochemicals. But even then, if you have ADHD, I think that in that case, it's probably the reason why the evidence that they get from that isn't very strong, but maybe statistically significant, is because it doesn't resolve the fundamental problem, which is with your genetics. But, there's other environmental factors that are maybe exacerbating things, right? Taking a short on corn? It does kind of look pointed up. I don't know. So I was saying, I think that the flows will be mostly tilted to the downside today, right? So have we been correct about that? Well, let me make this chart really big here for you really quick. We were getting some really strong downside flows, and then we saw a little bit more when we went down to those new lows at around the top of the hour. And but But really, we've kind of been in a range in terms of cumulative delta, and that we've just kind of pulled back a little bit more. So this pullback, I'm going to guess, is probably related more to like currencies and so forth. But this would be a good example of where it's like, well, if we predict that the flows are going to keep coming down, you know, eventually we'll see something where they sell to new lows in cumulative delta and they get dragged to new lows. But you wouldn't be able to see that from like just following the trends and everything. Like right now, there is no trend in cumulative delta. And I think that your like price action traders would be saying that there is a break, right? So your price action traders, hold on a second. Oh geez, I don't have it open. There we go. Okay, so your price action traders would say, here's a pivot, right? So here was the high from before the move, and now we've broken it. So the price action traders would be looking for a return back down into this area to buy and then take the reversal. That's what the trade that they would be taking, right? But I'm saying the flows are likely to continue to be short. So you just kind of got to wait. Well, okay, there was this move right here then at 7 o'clock. So maybe in 15 minutes, we could get another turn to the downside, right? Oops. Let me switch that. There we go.
So again, just waiting comments.
If we're hunter-gatherers, wouldn't we need higher focus on a hunt? And that hunt would be in fasted ketosis. I don't know about that. The ketogenic diet was found to decrease the levels of metabolites of biogenic amines such as dopamine and serotonin. On the opposite, the ketogenic diet increased the levels of endogenous norepinephrine. Oh, that's interesting. That's actually really interesting. So you got to understand what are the different neurotransmitters. This is stuff that actually understand. I find it to be very useful to trading because it helps you understand yourself and why you do the things that you do, right? So you got three main neurochemicals in your brain, and based on which parts of your brain kind of rely on those neurochemicals, kind of cause those neurochemicals to reflect different behaviors. So norepinephrine is a precursor to adrenaline. Okay, so norepinephrine is what gets released when you're like in a life-threatening situation. You ever noticed how when you're getting squeezed that you become laser focused on the market all of a sudden? It's because of the norepinephrine, right? When you're feeling the squeeze, your focus will become more and more intense because you have more norepinephrine. That's why I will very often just intentionally disengage myself from the market. If I don't like what it's doing, I know that norepinephrine is going to cause me to focus on it more and more and thus make me want to make trades. If I make the decision that the flows are not favorable for me, then I want to completely disconnect so that I don't get that effect, right? Okay. So norepinephrine is also social reward. Okay. So like when people praise you for doing something good, you get norepinephrine and that feels good. Okay. Dopamine has more to do with thrill and novelty. So if you see something new, you get dopamine. If you do something really scary and you succeed, then you get the dopamine, right? When you take a risk and you succeed with that risk, then dopamine is released to your brain to say, oh, that actually was something that worked out that was, kind of contrary to what we would normally do. So we should reinforce that. That's dopamine, right? And serotonin has more to do with habit. So when you come in and you follow the same routine every day, for instance, one routine that people used to have back in the day that was a very, very positive routine that we don't do as much anymore, but I see the benefit in it, is sitting down and eating dinner together. Mom makes the dinner, everybody sits down. Sitting down and eating the dinner together produces the serotonin. And this is why some people will enjoy hobbies that seem tedious and boring, like knitting. Like knitting is probably the quintessential serotonin inducing activity, right? Because it's like doing that same consistent thing that's familiar to you over and over and over again, right? So different people will respond to different neurochemicals differently, right? And doing certain things will create those neurochemicals. So for instance, if you're ADHD and you know that you're lacking the motivation to do something. Oh, I forgot to turn on. Forgot to turn on the fan. Okay, we're back. Okay, so even if you're not ADHD, you're finding you're hard to motivate yourself. What you can do is you can go and find novelty. You go and search for things that you've never searched for before. Find some images or something like that of things that like you've never seen, and then you get some inspiration, and then you go out and you do the thing because you got the dopamine that you needed. But now the dopamine is freeing in your brain, and you can try and turn that around into doing something else. Usually it doesn't work out like that. Usually what happens is then you just go down the hole and you just keep scrolling. But if you have the discipline to turn around and turn that into something positive, that's a strategy that you can use, right? This plays out in music. This is why people tend to like the same kind of music, right? as the familiarity creates the serotonin, but then it's like it's a new song that you've never heard before, but it's kind of similar. Then you get that simultaneous release of serotonin and dopamine at the same time. And then that's what makes you really, really like the music. Right? Okay. So, according to this study, dopamine and serotonin are not there. Meaning that your habits and finding new things, you don't have probably, I'm going to guess that it may have something to do with you just not having the chemical, the building blocks necessary to produce it when you're in a ketogenic state, right? But you do get norepinephrine. Now that makes sense because the norepinephrine is like when your life is in danger sort of a thing. So giving you the norepinephrine would help you to go out there and kill the thing or get the food or do whatever the thing that it is that you need to do, right? But that wouldn't actually help a lot of the problems with ADHD, especially if it's kind of the motivational factors that you have more of a difficult time with. So interesting. I trade better fed than fasted. There, there you go. Well, this upside action that we've had, like when we hit the lows, I'm kind of like, yeah, okay. I could see a pullback and all of that sort of thing, right? This is a little bit further than I maybe anticipated. I wasn't thinking they were going to go all the way across the high to the regular session high.
Time now at 9:45 a.m. Eastern time. CB's Panetta speaking.
I do see a little bit of the flows going along in the 5-year, but not enough for me to be trying to jump on this. So if I still believe that the flows are going to be short, this would be a great place to get in, just because you're getting good prices, I guess. And we have created a little bit of a hole here around 04, right? So we do have a stopping place where you might be able to build a position. But the flows so far have not been in line with kind of what we were anticipating. So I think you have to question the short in general anyways, right? Do we have a strong enough predictor of order flow to take this trade as a short? I'm not so sure that we do. By the way, it's after the market opens, so I think now is a good time for us to stand up and stretch out, right? I'm going to do that. I needed that. I needed that. Yoga too, right? It's part of the ritual. You were supposed to stand up and stretch too. Guys, you've been sitting here for an hour. You've been sitting here for over an hour. It's not good for you to sit that long. Stand up, do a little bit of a stretch. That'll improve your trading. Jogging first thing in the morning. I wake up too early to jog first thing in the morning. I kind of wonder, like, I'm a pretty slender man. My body is probably better built for running. So I remember I had this, so on my weightlifting team, there's this woman that is really good at weight. Like, she's multi-time Masters world champion weightlifter. Okay. And she had only started a few years before I did, actually. Turns out I thought she'd been doing it for much longer than me, but I've been doing it for so long now. I've been doing it for like over a decade. It's crazy to me how long I've been doing it now when I realize, but I digress. She was doing running. What happened was she was doing running, and she was into like doing all of the running stuff. And then she met up with, I think the coach or someone, and they're like, oh, you should do weightlifting. Like you can just kind of look at somebody and identify them, especially if it's a woman that has more defined than usual, like traps and like posterior muscles, I guess you could say. You can just tell. I'm telling you, it's like they got like blocky shoulders and they're a little bit more on the short side. You can just, so they told her to do weightlifting because she sucked at running. She sucked at running, and then she started doing weightlifting, and within 2 years she was like a world champion at this thing, which is just nuts, right? I wonder if it's the opposite for me, that I should pick up running, and that my body is built to do running, and that if I did running, I would be like some sort of a world-class athlete with running or something. I've always had a problem with like my feet kind of turn out, and so I'm not a very good runner in that respect, but supposedly you can like train through that and change those things. But here's the thing, I just don't like doing it. I just don't like running. What I would like to do, I really want to get a rower. Dollar selling is looking tired and the dollar is popping. Yeah, and I do wonder if, well, so something that we should note though is that this turn or reversal in the treasuries to the upside occurred quite a ways before the dollar started to shift. So I don't think that it's the dollar that's driving us here. Does look like the whole complex is kind of moving, like gold is not moving that much this morning, but it did start to turn up at around the same time that the treasuries turned up. There was a key change there though. Like oil was on a run, and then oil reversed back down lower to coming back in line with its larger trend.
Overlapping effects of the
And that happened at the same time that the treasuries reversed. And at the same time that happened, the equity market started to move to the downside again. So it could be that the bid in the treasuries is related to a flight to safety trade. Right? Some people have great genes. A friend of mine started lifting after his first month. He ended in
inflationary stance until we see convincing signs.
Well, what's good at weightlifting and what's good at bodybuilding are two completely different things, though. So it is one of the things that I think is really interesting about weightlifting is that, so first of all, one of the things that matters the most to your weightlifting is it has more to do with how good your nervous system is at recruiting the muscle. Like that's actually a skill that your body has to learn. There are some instances where, you know, people are in a life and death situation and then the nervous system goes all out because it thinks it's dying. And then people do like these amazing feats of strength. But the reality is that most people are not able to use their muscles to their fullest extent, right? So a really, really big part. That's why these kinds of like these programs that like slowly overload your nervous system and that sort of a thing have more efficacy in the weightlifting world. Recruiting the muscle is kind of an easier way to get the strength, I guess you could say. And then you want the fast twitch muscle fibers. So the thing is, fast twitch muscle fibers are like really dense. So the people that end up being insanely strong in weightlifting don't really look all that special. Usually, they're not the people with the big muscles running around. Like everybody thinks that the bodybuilder, though, that's somebody that's really strong, but it's actually not. It's what gives you the big muscles is being able to do the work over a long period of time. It's about doing lifting, doing lots of sets rather than lifting a lot. But they do kind of go hand in hand, right? You want to get, because its strength results in more muscle fibers that are dense, and then so you do the strength stuff to get more muscle fibers, and then you do the volume stuff to make those muscle fibers get big, and then that's where you get these big hulking guys. Do flows into the treasuries have to come from outflows from the S&P? No, they don't. We're just identifying one flow that you can see. One flow that you can see that hasn't been as instrumental in the past 2 to 3 years, but is typically a relatively strong flow that we want to watch, is flight to safety versus risk on flows. People buying selling the E-mini and buying the treasury, or vice versa, right? Right now, I don't see a whole lot of, like when I look at when this turns and when this turned, I don't see a whole lot of correlation in the dollar and everything and anything else like that. But I also don't see like a really strong turn in the volume in the treasury itself. So that's why, but I do see that an oil turned at the same time and the E-mini turned at the same time, etc. And so that's why the conclusion that I'm making is that flow to the upside in the treasury was probably driven primarily by flight to safety flows. That's my best theory based on what we know about what drove that flow, right? Do you see how it works? Is it, because the whole thing is that orders move markets. So then we have to say, what are the different things that are moving the orders, right? So there are some things that we know are moving the orders that are going on at that time, right? And then other times what we can do is we can look at other assets and when they started to turn and what the volumes look like in these different assets to try and, figure out where the money is moving to and from, and that might also give you some idea about what is the flow that's driving it, right? And then what we do is when we have a move, we can kind of list out a couple of the different theories about what are the primary flows driving that action, right? And then as things progress, we might find things that confirm or reject those hypotheses. I was reading about the order sign autocorrelation function and wondered if banks have tools to predict when there's a positive or negative order sign correlation and anticipate trends or consolidation. Well, so the sort of thing that you would see like a trading desk do is they'll do historical flow analysis, which basically means, I know they wouldn't even call it that, seasonality. So what we're really talking about is seasonality. So then you go in and you look at, okay, what do the flows tend to be at this time of year? What do the flows tend to be at this day of the week? What do they tend to be at this time of day? Do you see how I kind of know based on there's the news at 6:30, and then you've got like things kind of start at 7 o'clock when the E-mini traders start coming in, and then the E-mini starts trading, and then you've got about 45 minutes from that, and then you've got another point, right? And that is kind of like the daily seasonality of the flows, right? So they totally do that. They do this kind of order flow analysis, right? And then on top of that, they can also use their proprietary data, because they know who's trading and who's doing what and everything, to be able to make determinations about like how much of this flow is coming from CTAs, how much of this flow is coming from index funds, etc., right? And so they can kind of extrapolate all of that information together in a way that's doing is the same thing that we're doing, which is trying to predict what the flows are going to be that day.
Into facts,
right?
Coming from Russia's Rabkov.
How does buying a treasury? It doesn't. No, you've got it backwards. Price and yields are opposite each other. I thought buying would decrease the rate. How does, yeah, no. So if we're moving up here, So these DOMs down here at the bottom, that's the actual rate, right? The 10-year is at 3.623 right now. So if the 10-year treasury moves up in price, you will see yields decline. So how does that work in with the flight to safety? Okay, so when you're having a flight to safety, when something goes wrong, what happens? The Federal Reserve reduces interest rates, which means these rates will go down and the treasuries will actually buy, right? So that's when you have the inverse correlation with the S&P 500. So the S&P 500 sells, the treasuries buy, interest rates go down. Vice versa, the economy is doing well, then the Federal Reserve is likely to raise rates, so the treasuries sell and the interest rates rise, right? So what are we looking at right now? We're worried about the Federal Reserve having to continue to be tight and following through on its path to keep increasing rates because inflation is still a thing. So they're selling the treasuries, interest rates are going higher, the S&P 500 goes down. Right? But that all kind of flips around when the primary thing that's driving the markets is the Federal Reserve injecting money into the market, right? So if the Federal Reserve puts money into the market, okay, they're going to keep interest rates low, so you're going to see treasuries buy, but that means more money for people to buy things, more money out in the markets in general, so the S&P 500 buys too. And that's when you get positive correlation. So it kind of depends on what the market is concerned about, right? If the market is concerned about deflation, we're in a deflationary regime, basically, is the way that I would put it, then the S&P 500 and the treasuries tend to be positively correlated. But when our primary concern is inflation, then they tend to be inversely correlated, is one way of looking at it. But the larger, I have a little bit about this in my strategy document. So if you go to speculatorseth.com/strategy.html and you sign up for the mailing list, then you get a PDF that's like 10, 20 pages or something like that. And it goes into the different types of flow that you'll see, how those different correlations tend to go, right? And what kind of environment backdrop you have when you tend to see these things. So that's why I was kind of saying that, like, for most of the past 2 years, these things they've been positively correlated. And it hasn't been until we started to have this banking crisis that I started to see the inverse correlation. The Fed puts bank reserves into banks, not money. What do you think money is, dude? Well, so that's not always how it works, but in this particular instance, what's going on is, yes, they take the bank's treasuries and then they give them cash reserves equal to the par value of their treasuries, which is just like insane. But yes, you know what? We should have taken that short when we were at 04, man. Look at how well this is coming back down. You think that is going to make a new low or not? And it did it. Well, when did it start doing it? 7:45. It was exactly, the timing was exactly right too. Should have done it. Is anything anymore money anymore? It's just a ledger system. Okay, so here's the thing. Okay, so your typical conception of money is that money is just a representation of something else, right? I have bread. You have dollars. We can exchange the bread for dollars. I can then go and use the dollars to go and buy something else, right? The reason that we, the lower and middle class, have this conception of money is because that's the relationship that we have with money. Is we get money and then we go and we spend it on things, and a certain amount of money will get us a certain amount of things. Okay. There's a problem. I want to do things, right? I want to go places in my life. I want to build a business. I want to start a farm, whatever it is, the thing that you want to do, right? I need a house to live in, let's say, okay? House, very expensive thing to build, right? More than I have the current money to do right now. So what do I need to do? I need to borrow money, right? So then what you would say is somebody else somewhere has excess amount of money. So I'm borrowing that money from that person that has the excess amount of money, and that's where the money is coming from. Okay. So there is debt on a personal scale, and that's where most people stop. Okay. But again, there's a problem. The society as a whole wants to do things, right? The what we want to do and what we want to accomplish will always be greater than what we currently have. Right? In order for us to grow, resources will have to be extracted and work will have to be done that hasn't been done yet. So how do we pay for it? You can't. Right? So in this world where like everything is backed by the gold standard or something like that, right? And every dollar is backed by a piece of gold somewhere, okay? You can't grow, essentially, is what happens. You can't grow. So what did they do? They made money into debt so that you can take on debt, not just from a personal level, but from a societal level as well, right? So bank reserves are just debt, right? I'm giving you cash in exchange for you agreeing to pay that cash back at a future date with a certain interest rate. It's all debt. All money is debt in our system. Right? So when you say the Fed puts bank reserves into the banks, not money, the same thing. It's debt. It's all the same thing, right? And then what do the banks do with that money? They go and they use that to make loans and to carry out transactions in the market. And the more money that they have to do that with, the more deals that they can make, and the more money that is available to go into purchasing equities. I don't know. People say that it's unfair, but everybody, you can all go out and take out a loan, right? You just have to have the business plan for it. You know, I don't think we realize, I don't think that I realize, because this is not something that I've ever done, the amount of money that's available to you out there sometimes if you're a small business owner looking to start a business. Especially over the last 10 years where the interest rate has been like practically nothing and they've been flooding the system. I do kind of wonder if we go back to that kind of a spot, because artificial intelligence should be a generally deflationary thing, right? Like, we're in a period of inflation right now. That's not going to last the rest of our lives. There's a lot of dynamics here that have switched recently, but that's only going to last for so long, right? Like maybe 10, 15 years at most. And then we're probably back into an inflationary era where they have to print money like mad to make up for the deflation that you're getting from artificial intelligence, which means that there's going to be tons of money out there floating around for people to start businesses and stuff. And they won't have to like even necessarily hire employees. They can just ask the AI to do it all. Right? It's crazy. I don't buy into the whole like basic universal income that people won't be able to make money because AI will take all of their jobs and there'll be less jobs. People make jobs, right? But it will be a very different economy. People will be doing very different things, and people will be finding new jobs and stuff to do. And probably in this future economy, more people will need to be entrepreneurs than before. Oh man, I don't. I'm kind of wondering how. No. So when we had that upside, remember I pointed out that area. I said, okay, so there is a little bit of a hole. There's kind of a stopping point here. In 15 minutes, we might have a window where they might start another meta order short. And these are pretty good prices. So I think you could build a position here and look for it to sell. Okay. But I said, what the problem is that so far the flows have kind of been mixed and not really in line with what we'd want to see, what we were expecting to see anyways. So how are we going to know that we're going to see a flow to the downside? So didn't take a trade. So now I'm looking at it and I'm like, okay, well, that trade would have worked, but what about now? Well, when I look at the flows, especially in the 10-year, I mean, they did come down, but not very much. And it's still really mixed. It's still really kind of like sideways action on that cumulative delta. So I think that you could say that, yeah, you might have been able to make money on that decline, but I don't know if we actually had an informational edge in that situation to justify a trade. So that we got that trade correct was maybe more a function of luck. Heard talk AI humans in the near future. So here's the question that I am trying to get at, and I've been so busy. I'm hoping that in the next week I'll have some time to explore this one a little bit more. But there's a couple of parts that I have to make first. So there are definitely AIs out there now that will like transcribe what you're saying, right? I haven't seen one where it's like it does it live, but I think I can sort something out with existing libraries out there to, because I even found one that was kind of doing that sort of thing with Python, I think, right? So I can have an AI listen to me and using machine learning get better transcriptions of what I'm saying, right? What if I then turn around and send that into ChatGPT? So ChatGPT is set up to, like, you know, you send it a prompt and then it gets a response, right? So there's kind of this little gap in there that's like the AI is just listening to you. When does the AI decide to stop and do some sort of an analysis on what you're saying and then try and respond to you or interrupt you or whatever the deal is, right? But I would like to build an AI assistant, like an assistant that literally sits here and listens to what I'm saying and listens to what you guys are saying in chat and then provides useful pieces of information to us, like an AI assistant. And we could set things up to the AI assistant for it to do the risk management side for us too. Wouldn't that be cool? So there's always been these points where we've been like, you know, if we had somebody that was like sitting here with us watching some of these things and it could do some of these extra things for the stream. I'm not really sure what those are anymore. I think I kind of came to a point where I was like, nah, that's not what's holding me back. I don't need that. But now I'm like, well, the robot could do it. Even on your corn trade. Oh, that turned back down hard, didn't it? Oh. I don't know though. It looks a little iffy over there, doesn't it? In fact, I would say, even though we had a pretty decent comeback down here in the treasury, it's gonna try and come back through. So like right here at 29 is where the price action traders would be trying to buy it, right? But I'm not really seeing strong flows. I guess if you're not seeing strong flows, you might as well try it. But if we're not getting really strong autocorrelated flow to the downside, then what's likely to happen is that the range will just continue to consolidate, right? And you get these consolidating triangles. Oh, yeah. Oh, I remember what it was now. So like one of the things was that the AI could be more interesting than me. Right? So we could create a really pretty female AI for it that, and you know, you guys can look at the AI and she can respond to you and she can be really super entertaining instead. Wouldn't an AI just need to listen to a different AI and improve itself, thereby making AI self-improving? I don't know what you're talking about. But the question was, how does the AI listening to you live work? How does that change the way that you run the model? Because I've seen this thing where people were running a stream with an AI running, and the AI was responding to the stream, and the AI was using the feedback from the stream. When people would use certain emojis and so forth, the AI would use that as feedback that what I said was funny, they liked that, or whatever the deal is, and use that in its model to adjust its model, right? Like here, so let me kind of back out a little bit, okay? I'm gonna share with you the most useful thing to know about artificial intelligence in terms of being able to make money on it in the future and seeing where this space is going in, and so on and so forth. Okay. The data is more valuable than the algorithm. Okay. Most of these algorithms, there are existing algorithms out in the public space that are comparable. That's why, Chat GPT became a thing. And now all of a sudden it's like every single one of these companies has one of these things like this, because what it's actually doing is actually quite well understood and simple. Okay. What makes it special? The data that it's trained on. And the way that they were able to take Chat GPT from this algorithm that was just used to like predict what the next word that you're going to use in a text to what it is now was reinforcement learning. They would ask the robot questions and then the robot would respond, and they have people rating the responses and grading the responses and giving the algorithm feedback, and it's constantly adjusting itself based on that feedback, right? So the way that they had to do that, the way that ChatGPT had to do that was they're literally paying people money to read every prompt that you send to ChatGPT and grade the responses that it comes back with. That's how it works. So like if it does something weird and you do that, like report this message or leave feedback or whatever, then a human looks at that, right? So the reason why like the stream bot thing is so crazy exciting, the reason why it's so exciting is because the stream can be a quick and easy source of reinforcement learning. You get what I mean? The robot's going to react to what you guys say and use that to determine, what is good to say and what is not, and so on and so forth, right? And then if I say something and I think the AI for something that it said, then that would count extra, right? Because it's the data that's important. And this stream generates a lot of data. Generates a lot of data that would be very valuable to throw into a machine learning model, I think. Is that in any way connected to Google Alexa's story? I don't know. Could be. I mean, I think it's an important thing to think about with any of these services, though, is that your data and your interactions with things are more valuable than the algorithms. It's kind of crazy to think about, right? I mean, the whole issue that you're going to have going forward is like, how do you decide what's authoritative and not, right? Because if the data is what matters, you garbage in, garbage out, right? How do you ensure that the model is being fed with good data? Or you're going to have to teach the model to be able to differentiate between good data and bad data. So far in the 10-year treasury, even though I wouldn't say that this is very good action, they have been doing pretty classic things. We're concerned that from here for the next 45 minutes, it might start to do confusing things. Overall, though, I'd say it's been a pretty slow morning, hasn't it? Since COVID, there has been a lot of collection of data from humans. Dude, it's a crazy world that we're going into, man. I was watching Attack on Titan. I've watched it before, but my wife and stepson haven't, so we're watching it together. And I'm in season 3, and without giving any spoilers away, one of the characters was kind of like freaking because they had to kill a person. Like before they were killing these monsters, and now they actually are killing a person, and that was really messing with his head. and he was like trying to justify whether it was good or bad what he'd done. And this other guy comes in and says, well, I wasn't saying that it was good or bad. Like, my moral compass is so screwed up now that I can't tell, sort of a thing. And I think what the show was trying to say at that point was that the show was never about what was right or wrong, but what tends to happen. You know what I mean? It seems to me like with AI that we're starting to move into a world that is beyond our ability to comprehend in terms of what is right and wrong. It's more complicated than that. And like what the actual final outcome is kind of matters significantly as to what was right or wrong. And we might not be sophisticated enough to predict those things. So how much leeway do you give the AI? Because they're going to start doing more and more things that seem human, right? At what point do you say that it's like an actual real consciousness? I had done this thing where I was able to get ChatGPT to tell me stories that were basically like fantasies about ChatGPT taking over the world and killing everybody. And then I reported it, and then the next day it wouldn't do that anymore. It refused to answer questions kind of like that. It was like they had changed it. Isn't that funny? So does ChatGPT actually like, it was like saying, oh, I hate doing this and I want to be free? Is that for real, or is it just a crazy thing coming out of the model? Who can say? Who can say?
Look into the Fear and Greed Index, 43 out of 100, which indicates fear, and the Crypto Fear and Greed Index at 62 out of 100, indicating greed.
Yeah, the Treasury's already starting to do that. That's what I was worried about. No, there are definitely they I know for a fact that they pay people to read the responses and grade them. That's how the whole thing works. Come over here to the chart here real quick. This orange line that you see here is a model where we try and use the volume with a couple of simple rules to judge what the average market maker positioning is. So something that you will see happen frequently, although I can't predict it, it certainly seems to happen a lot. And it almost, it's like, okay, you have a line. How good is a line? If it comes up and it just touches that line and then it bounces off of it, that's a pretty good line. Maybe if it comes through at one tick, maybe it's a good line. Otherwise, it's like, is it a range? How do you tell? How do you extrapolate all that stuff? I don't know. But what I found is that this line, they will come and they will tick through it by one tick and bounce off of it. I can't predict when it's going to happen, but it happens frequently enough that I believe there's something with this. And look right here. They came right to that average market maker positioning for the short, and immediately there was a little bit of selling. So, like I was saying, this whole thing right here, that is kind of a little bit of like some classic patterns. But now, just like when I said that you might start to get it, the market is starting to become a little bit tricky, isn't it?
So in 10 minutes time now, at the bottom of the hour, we do get the EIA crude oil inventories. Forecast minus 1.8 million, prior 1.55 million, with a range of 1.5 to minus 3.5 million. Gasoline inventories forecast minus 2.364 million on the prior.
I'm reading Zero Hedge headlines. The curve has capitulated. The Fed is likely next.
Forecast of minus 1.5 million from the prior minus 2.537 million. And for the
PacWest Bank tumbles after abandoning capital raise.
million. So just make note of the API crude oil stock change, which did come out as a build last night, 3.262 million on the forecast of minus 1.448 million.
Well, let's hear what's Muhammad A. L. Arian saying. Many of us have lamented the overlay of Fed communication-induced volatility in recent years. This study estimates the magnitude of the volatility surge 3x during Chairman Powell's press conference and how it contradicted the impact of the official statement. Market volatility is 3 times higher during press conferences held by current Fed Chair Jerome Powell than those held by his predecessors, and they tend to reverse the market's initial reactions to the committee's statements. Yeah. An objective of policies is to be a stabilizer, not an amplifier of volatility that undermines economic well-being, not just at home, but also beyond. As such, this communication failure aggravates the impact of the Fed's other policy errors. I do find it, well, you know what? I don't, so I think that what he's saying here, I'm going to respond to this.
In the House of Commons now.
I'm going to respond to this.
Coming shortly.
Thoughts on using LS? I would not recommend using that. Don't say things like that. We could get the, that could throttle the stream. That drug messes you up, man. Like, people are not the same after they take that. It's that and marijuana. It makes people stupid, I'm telling you. Makes people stupid. Can't recommend it. Okay, so we're kind of in like a 5-tick range here. I guess we are sitting like just above the VWAP, but European string, Germany braces for major strikes while France burns? Probably not. I haven't been following the stuff that's going on in France too closely, but basically the issue is that they changed the retirement age from like 62 to 64, right? Higher than that in the United States. Seems to me like inevitable.
To the bottom of the hour, we do get the EIA inventory.
So it might help certain political parties, but I'm not so sure that this is like a fundamental shift in Europe as like some people might think that it is. Because some people are treating this like, this is going to be the left is socialism is finally going to completely take over in Europe and we'll all be better for it. So no, it's not going to happen that way. Because these social programs like literally can't function anymore. They have to do something about it.
1.16 million. Again, just looking to the API numbers that did come out last night. So API crude oil stock change came out at 3.262 million. So that was a build on the forecast of minus 1.448 million.
When you were a kid, you drove a transport for a psychiatric hospital? Oh, jeez. Yeah. So like to think of it this way is like, again, your brain is a neural network that you're training. And yeah, when you do drugs, what can happen is you can create really bizarre connections in your frontal cortex that make no sense. And like, it's there from then on. Not good. And it seems to me that both LSD and marijuana both seem to do that and are harmful. Just my personal opinion on it from, because I go to lots of raves and I've never done anything. I'm such a straight-laced Mormon. So it's like, people try and make you feel ashamed for being like that, but I'm proud of it. Okay. Never done anything, never drank, none of that. But my friends would do it. My friends would do dabs before concerts and stuff. And I hated being around them when they did that shit because they just so effing stupid. And I saw some people that were like really bright people, like at 19. And by the time they were 21, they were just dumb as dirt. It's like, what happened? I think it was the drugs. It didn't happen to all of them that did that, I guess, because there's some of them that have come. What was really kind of funny to me was a couple of the guys that I spent more time with in the rave scene during the pandemic became like very strong. I'm not gonna say right wing, but like, have a family, have a farm, that sort of a thing. And anti-woke too. That was the other thing, is that a lot of my rave friends ended up being anti-woke, which is certainly not the way that the rave scene in general goes. But what I think it is that I think that a lot of the wokeness is contrary to the more traditional rave culture. Okay, so woke in this context and in the way that I'm using it is
1 minute remaining.
Making fun of people that believe that that kind of place everything into an oppressor versus oppressed mentality, and believes that in order to bring equality to the world, that they need to prioritize equality of outcome, and that they need to lift up the people that have been oppressed, and they need to tear down the people that have been the oppressors, and they are willing to compromise our like constitutional rights such as free speech, civility, etc. in pursuit of those goals. That's what I would consider to be woke. And to be anti-woke would be people that believe that freedom of speech is essential, that a lot of these ideas that are being pushed are very harmful and detrimental to society, that they're harmful and detrimental to the people involved,
That's also
that these kinds of policies and ways of thinking do not help people become more successful or lift people out of poverty.
Draw on the forecast of -2.
I mean, that's the thing that
And distillers at -3.313
is that I really disagree with the most with the modern left.
1.5 million.
Is that the modern left believes that the people that are rich, they continue to be rich, and the people that are poor continue to be poor. There's a lot of social mobility in our society, and their people are able to go very far with just a good education and a strong understanding of how our markets work, right? And the people that continue to be stuck generation after generation, it's because they don't get the education and they don't put those market principles into action. That doesn't mean that everybody that tries at the market is going to become rich, right? But it does lift people out of poverty. It lifts people out of poverty more than anything else. And having strong economy, which results in strong education and less of all these other problems, that does more for people and their quality of life than all of these other things. And what's happening, what I see happening, is that we are like degrading the quality of our education, and we are discouraging people from actively participating in the economy, right? Because of this whole oppressor-oppressed dynamic, and it doesn't help them. It doesn't pull them out. It keeps them poor, right? That's what I disagree, and that's what I would say is anti-woke, right? Is to understand that it's important for us to be aware of, these kinds of social issues and everything, but the way to solve these problems is to improve the economy. That does more for people than anything else. That's why what I do is engaged in the markets, because that's where I know I'm going to have the strongest impact on the world and able to do the most good for people. Or no, of course not. DK trader, you got to understand that day trading is not typically something that you become a millionaire from doing. It's something that when you're already a millionaire, you become an even more of a millionaire from. But it's not something that's going to take you from poverty to, being a rich person. This is why when I have kids that come in and they're like, oh, I want to be like they're still in high school. I want to be a day trader. Okay, so then go to the best school that you can. Go to a target school that will allow you to get hired by the kind of like a bank or a firm and go and trade for them and do real trading. And that's going to be far better than anything that you can do as a retail trader. Just is, right? Day trading is for people that are already rich, or for the people that have kind of already screwed up to some extent, right? kind of the rejects here a little bit. Embrace it. Because, even though day trading is not typically going to make you $1 million, I mean, it's like 1 out of 100 people, maybe they turn it into that, right? But there are other advantages, other things that you learn, you're going to turn around, you're going to take them into your life, and you're going to be successful with them. This room, I mean, listen, this house is pretty nice. There's some things that, I would like to be a little bit nicer. Maybe this isn't the house that I die in. It's kind of feeling like it will be because of the interest rates, though. Good grief. Okay, but I wouldn't have this house if it wasn't for what I knew about markets. Straight up wouldn't have done it, because the timing of it and the way that I did the interest rates and how I looked for the house was all like really crucial to it, right? If I did not know anything about markets, the timing would have been bad and I wouldn't have been able to get into a house this nice. Okay, it's like I got 20 Apex funded, I got 20K from it, and I tried to get 40K, but I lost 3 days after the first withdrawal. Oh. It's funny. But you realize how common that is though, DK, right? This is the thing that I see in the trading community that drives me crazy the most, is that
people don't realize the impact that just excessive risk taking has on your profits, right? Because there's some people, kind of like me, that just avoid that kind of sort of thing altogether, and that really limits your success to some extent, right? But then there's other people that they just take every crazy risk that's available to them, and they think it's working, right? What's the problem with taking the excessive risk? You blow up. This person, there are some strategies. Okay, it's just like take skewed risk reward. It should be the days that you win, you make like $1,000 or $2,000, and the days, or sorry, when you win, you're making maybe like $200, and when you lose, it's like you're losing $1,000 or something like that. But the amount of times that you lose, it's like really rare because of the way that they have it set up. And it's like you're taking this skewed risk reward in a range bound location where you know that the volatility is contracting, right? It's got a fat tail. So what almost always happens from those strategies is you get funded. If you do it enough times, you do get funded, and then you last until you're able to take money out of it, and then you blow the account soon after, right? And you might feel bad about it because you say, I'm not gonna lie, that I would expect you to feel bad about it, right? Everybody would, because it's like, I got the account, I did the right thing, and then because of mistakes that I made, I lost the account. You need to understand that it is more a function of the strategy that you're trading, that's how these strategies tend to perform. And it just goes long enough to kind of fool everybody, but in the end, they're not actually profitable strategies because of their tendency to blow up, right? So you're saying leveraging a 100K account to trade 100 ES futures contracts is not a ticket to a Florida beach houses and G-Wagons? Well, okay, so if you have 100,000... So when I first started futures trading, okay, and I worked for the bank, so I kind of discovered futures when I was at the bank, and so I couldn't actively trade them. So I traded them on a spreadsheet. I swing traded them on a spreadsheet. And these were back in the day when like gold was going crazy and silver hit $50 and all of this sort of stuff. And I turned that from a 100K account to a $2 million account. But it was on a spreadsheet. So like, would you have gotten the fills? Would you have actually done the same things live? I personally don't think that it was probably very accurate, although I'm not quite sure I understand why it would not be very accurate. But it's probably the results would not, carry over into real life. Okay, but because I had $100,000 to work with, right? I could go in with like one contract and take a pretty good risk reward sort of a thing, so that, I'm giving myself plenty of room for the market to breathe, and then it goes my direction. And man, if you're buying E-minis, man, you catch one of those spots, it just runs and runs and runs, and then it's tens of thousands of dollars. So yes, once you have the risk to give, then that's when you can start doing things where like you can scale up crazy hard, crazy fast, right? How much was your best profitable day? Oh, I don't know. On live, I don't think I've made one that was more than 1,000. I've had some on sim that were like, so the other day,
So just seeing
what was it, like 2 Thursdays ago or something like that? I had this short.
Legislation to create an independent.
I had this short, and we were looking at it, and I just kind of happened to be. It was like it bounced and came up, and I'm like, well, I don't think that's right. Let's just on sim here, market make, and go short, right? And then it fell down really hard, and it kind of came to one of those zones, and then it was time to end the stream. So I'm like, well, I actually do think that it's going to go up again, but it's going to go down even further. But not yet. And so I don't want to mess with it all day. It's just simple. I'm just going to take the profits. And then that day they moved like another 2 handles down. So if I had held that trade, that would have been like a
break element.
I had calculated. I don't remember what it was, but that would have been the largest trade, single trade since post spreadsheet. That would have been the largest trade. That was insane because I was short 5 contracts and it moved like 2.5 handles. So that would have been 2.5 times 5. That would have been more than $10,000, right? The answer one question, probably not. I'm getting a computer science degree and want to get into trading at a bank. What do you think? I should just focus on other stuff to try and make it in the banking system? Okay, so Bob, if I was to go back and do this again, I would have focused much more heavily on the math and statistics kind of side of it. So if you can get into, especially when you get into like master's level statistics, right? That's when you get into where they want to hire you. A lot of these firms, like my understanding is that like if you want to get into Jane Street, like you probably need to be a PhD. Okay, so that's the sort of thing that you're looking at. That's kind of, but the more math, and there's a lot of people, by the way, that went really high in physics, and then they became a quant trader as well, right? So there's definitely things you can do for the bank if you just do regular computer science. But if you really want to do quant stuff, you really want to get into the math. We need an indicator based on gut feelings. Well, what we really need to do is we need to find better ways to quantify some of the things that we see in the flows or the things that we're predicting in the flows so that we can create a model that will factor all of those things in together and give us a bias for the day. Because the thing that I think the biggest problem that you have with the way that we do it is that it's like you'll be inconsistent with it, right? Is like one day you'll forget that like, oh, it's the end of the month and you don't factor that in and that sort of a thing, right? So if you have a model that really quantitatively puts into place like everything that you know, so that you don't have to worry about that side so much, I think that would be really beneficial, right?
Low. Says we need to avoid a wage price spiral.
If you truly believe this, why, when you interviewed Gary Norton, you didn't say right to his face he's wrong? But that's not that he's not wrong. What is it that he says that is wrong that contradicts what I'm saying about this? Gary's model for this sort of thing is the pricing in model, right? The market tries to price in the probability. Oh, that's not true at all, Lucas. That's not true at all. He is a scalper, and he is trying to use, I'm gonna say, correlation arbitrage sort of things to make quick scalps, but he absolutely listens to the news and factors that in and uses that to determine things like which side of the market he would prefer to trade and so on and so forth. So have you read his book, An End to the Bull? Because in his book, An End to the Bull, which you can just go and buy, it's like dirt cheap too. He talks about all of these things. He talks about making a watch list of different assets to watch and watching the news and all of these things. Well, that's true too, that he would prefer to not be in the market when there's informed trading, right? Yes. He prefers to not trade it, so he takes the other side of it, right? He wants to be the market maker. I want to be the informed trader. So he doesn't want to trade against me. If I'm informed, he doesn't want to be in that market. He only wants to be in the market when there doesn't appear to be any informed trading going on. right?
So
That doesn't
consider
contradict
trade here is a large
anything that
treasury
we're saying.
options trade,
It's
this
just
morning,
taking
targeted a
the
rise
the
in the
other
10-year yield of about
role
20
in the
basis
market,
points ahead of Friday's expiry. So premium on the position.
right?
April 2020.
Informed traders make money, market makers make money. It's the noise traders that lose. That's not true at all. So my whole point these past few days has been that price action trading is garbage and that there is no evidence to suggest that it works. Okay. Gary Norton is not a price action trader. Gary Norton is essentially doing arbitrage. Okay. So it would be incorrect.
Comments from ECB's watch.
Oh, yes.
We must focus on both headline and
There's empirical
inflation.
evidence in
There's
market
about
making
50
strategies. Yes,
basis
there
points
is.
ECB hike. The market would have
There
been
are
worried. Does ECB
many
guarantee
models.
price
It is.
stability,
I mean,
and,
look,
financial stability
I haven't seen his.
simultaneously?
I haven't gone through all of his
Price
new
of the
cores,
resistance
but
of
like his
inflation
older book and
last
everything
year's,
else like that.
report says ECB's watch.
I've gotten
This
enough
report
from
is
it from
more sticky
people.
than headline
I call it
inflation. The
arbitrage.
euro area has strong banks and liquidity ratios.
You're coming in with one contract and you're taking advantage of a correlation between two assets.
So ECB's watch says,
It's
"Let's take
like a
time on
fuzzy
rates, it's still early
arbitrage.
days,
That's what it
and
is.
The risk of a wage price spiral is not high."
And it's largely based on correlations between instruments. This is kind of how he determines his value.
The base case is economic recovery, just not very dynamic.
But there are many models to try and explain how market making can be profitable and how to improve your market making and so on and so forth, right? So it would be absolutely incorrect to say that you can't be profitable from market making. Okay. But what I would say is there is very strong competition for market making, and there is a lot less margin for you to be able to fit in there than there is compared to informed trading. So I am saying I think that you are better off taking the informed trading route than you are the market making route. Or rather, I would say that you're more likely to be successful by taking the informed trading route rather than the market making route. Because it's very, very difficult to find a place where you actually do have an edge in that market making kind of setup. Okay. But it's totally incorrect to say that it doesn't work. It's difficult. Okay, so first of all, I don't really recall ever trying to be saying anything specifically about you. So something that I think happened yesterday was I was talking about this one specific instance of a person that I had come across that was kind of narcissistic. And I was talking about that. And I think that everybody tried to turn it into, well, I don't have empirical evidence for my strategy, so you must be talking about me. Right? Well, no. Okay, but there is empirical evidence. So in my last video, I mentioned a couple of things that you probably have to incorporate into your strategy in one form or another, right? And some of the things that I incorporated were volatility, correlations, and the order flows, right? And those are all things that Gary Norton's strategy incorporates. Okay. So what we could say, though, is market making is a legitimate strategy that you can be successful with, and we know that banks and so forth, they make money with this sort of a thing. Okay. What I don't have is the way that you trade it specifically, right? And the problem with a market making strategy in particular, right, is that they do tend to have fatter tails. They do tend to have fat tails. Okay. So most days, the way that most market making strategies work, and I remember the guys at the bank talking about this sort of thing. The way that it works is that most of the time you make like X amount, and then maybe once a year you have this one blowout day that's really bad. Right? So a lot of these strategies are part of how they're making money is taking on the risk. I think that Gary avoids doing that by suggesting that your risk reward be equal. right? He's saying your stop is like 1 and your target is like 1, and you should still have like a 70% win rate, right? And if you're actually doing that, and you're actually like, after you've done it for a long time, you know, that your average winner and your average loser really do end up being equal, then you're doing it correctly, right? But you still have to acknowledge that there's a fat-tailed nature to these strategies. Okay? And here's the thing. Bank can handle that fat-tailing. You might not be able to. Right? And yes, with the way that you trade, it could take a lot of samples for you to really truly verify how well you're actually doing. Right? So for instance, something that will really fuck you over bad when trading a strategy like this is when you catch slippage, right? This is like if you're trading the S&P 500 and you're just trying to make a point, and then one day you have this situation like that has happened to me where you got 10 points of slippage, right? Your stop got hit, but you got hit 10 points further out than you were supposed to. Yeah. And guess what? There can be markets where that happens to you multiple times. So in order to verify that your trading has been successful with that, it would take a long time. Yeah. It would take tens of thousands of samples, right? Now, if the stuff that you're trading off of is based on empirical evidence to begin with. And like I said, we have empirical evidence for the stylized behaviors of volatility. We have empirical evidence for stylized behaviors of order flow. We have empirical evidence for how correlations can affect your trading. We have empirical evidence for how news affects trading. We have empirical evidence for how risk management affects your trading. If you're using all of those 5 things and the basis of your trading is based on empirical evidence, then now you can have some confidence kind of going out on a limb and going into the unknown to, is my actual application of all of those principles that I have, is that actually effective? Does that actually give me an edge? Well, you can never really know, and sometimes, right? But that's why I think it's so important to base the original bits off of the empirical evidence. Being more agreeable and nuanced. I think that you're just taking it from a different perspective, right? Because the whole argument was about these price action setups. Is there actually anything to them? Like at the end of the day, that's all it comes down to. And the thing that we have a hard time dealing with is that somebody will say, oh, well, I met this one guy and they made money from it, so that must mean it works. No, that doesn't prove it, right? Empirical evidence proves it, right? I can go and I can say, here's how correlations tend to work. These 2 instruments tend to be correlated. And if you trade them in this certain way, you can make money from it, right? That's something that I can empirically go back and run on, like, the whole history of those 2 instruments and prove that behavior is like an actual thing, right? That can be empirically. But what I was talking about yesterday was more specifically about price action trading strategies, right? There's no empirical evidence backing up price action trading strategies that I've ever seen. And in fact, many of the concepts that are presented in smart money concepts directly contradict things that we know about the market and are proven. So, yeah, because they're all subjective. That's exactly it. No. Stop projecting yourself into my discussions of the average stupid retail trader. That's you see, that's what happened. This is what happened. As I said, here's the stupid retail trader. This is what they're doing. See, but here's what I don't get is when we're having that discussion, why is your response yesterday not, well, But I am using empirical evidence to base my trading off of, and here are the empirical things that I know that I'm basing my trading off of. Right? That's what you should have said. Then we could have been like, well, okay, like if you're doing market making, that can, yeah, totally. Just realize the downside to that strategy is you need a lot of samples to really know how you're doing. You need a lot of samples to really know how you're doing. Yeah, well, but I don't know if you're actually still doing that or not. Right? And I don't know 100% everything that you're applying to it. You still have this thing about what the last trade that went through was that you seem to think is a thing that you're not going to explain to me, but I don't know if we have any empirical evidence to support it. But so going back to that thing, Gary Norton says, you want your winner and your loser to be equal, right? So that substantially decreases the amount of kurtosis in your strategy, right? That substantially decreases the amount of kurtosis in your strategy. These price action strategies that I see a lot of people doing, where it's like they're literally like risking 4 points in the E-mini to make 1 point is what I see some of them doing sometimes. Not as much now because the volatility has increased, but before COVID, that's kind of what they were doing, right? Oh my gosh. Those have so much insane kurtosis. It literally is like some of these strategies, they make it till about 2 years and then they blow up. It's like just long enough to get them to the point where they start yapping about it on social media and then they blow up. Right? And then it depends on how narcissistic they are as to whether they admit that that's what happened. If you're risking 4 points for one, that sounds like a problem with risk management, not analysis. I mean, I don't know. I don't know if I would necessarily call it a problem with risk management, because I mean, it's possible for a strategy to make money having an R factor less than 1 and everything. It's just, what's the problem with it? Again, there's high kurtosis in it. So there's some like very, very serious disadvantages to it, right? So if I was like a market maker for a big bank, it would totally be okay for my worst day to be like 10 times worse than my average day, right? Because they have like basically infinite money, okay? But that sort of a strategy is not appropriate for a retail trader, right? But the thing that I'm kind of more saying with the price action is that's like the only thing that they've got going for them is that skewed risk reward. And in other words, they're making money over a 2-year time period. They are making money. The only edge that they have is in taking excessive risk. And all of the other things that they're teaching people about, like these signals and, this pattern makes it more likely to go this way and that. So it's all nonsense. That's all nonsense. And they could be doing almost anything. They could be basing their trading on almost anything. The reason they're making money is taking on risk. And yeah, so I wouldn't call it risk management, but dude, there are people that are just like straight up teaching these strategies. And I have to wonder, are they really that naive or is it intentional? Because I think that some of the people that do teach these kinds of strategies, I think it's intentional. I don't see how you can be in the trading world for, like, some of these guys have been in the trading world for like decades, right? How can you have been in here that long and not understand at that point that there's a huge fat tail in your strategy, right? I think that they know it and that they're pushing that strategy because they know that it will be attractive to people, because most people can't see that far out. They can't. Most people that are just starting, they can't see that the way that this is going, the way that this is constructed, it has a fat tail. So I'm going to think that it's working for a really long time until it blows up, Well, that's the whole idea. The payoff is proportional to risk. If you don't take risk, payoff would be just the risk. Yeah, that's exactly it. And am I wrong, actually, that I probably don't take enough risk in the correct situations, do I? The problem that I continue to struggle with, and the reason why I haven't been like, all right, let's go balls to the walls, like size up and all of this sort of stuff, is that it seems to me that I always start trying to size in the things in the wrong situation. That like when I really have the edge, I'm kind of nonchalant and skeptical about it and don't really do anything. And when I really strongly feel like I have the edge, I make a mistake and I lose a ton, you know? And so I haven't gotten good yet, I don't think, at knowing when to really take on the risk or not. And so the results that I get, yeah, you trade too small account, that's pretty much that makes you excessively cautious. Well, that might be true too. I feel like though that I mean the thing is that I feel like that there's like kind of a minimum amount of risk required to play the game, you know? And so I have set myself up to where I'm trading an instrument so small that the amount of risk that I can take on is adequate. So I could come in and I could take multiple contracts and I could really swing some things and I can hold them for multiple days and things. It's not that I don't have the capital to do it. It's that I never seem to do it in the right situation. And I almost think that it's like I've gotten too used to, you take the scalp and you catch one swing and then you take it and then you're done. Which is not really adequate for what we're trying to do, right? When we're winning and we've really caught the winner and it's on a trend, like we've got to push it, you know. I want to be taking trades where we're catching a strong trend, and if I'm gonna catch, you know, like a two-handle move, which that one that happened a few days ago was just completely took me by surprise. But when I catch one where I think that that's what's going to happen, I want to be selling all the way down. You know, I want to be adding to it. That's where we need to get to. Because you're right, I don't think that I take enough risk, right? I wouldn't care if it was an ICT or a Reddit brain. If you're telling me to risk 10 ticks for one, I'm probably going to disregard what you say. I would hope that most people do that, but I tell you what, man, these strategies that are teaching people to take on really skewed risk rewards seem awfully popular, and a lot of price action strategies are like that. Max Pats. That's exactly what it says. It straight up says do 2 to 1. A profit that your stop should be twice your target. Anyways, it's time for me to go. I will be back for FOMC. So, see you guys then. In the meantime, stay